Howdy, who all my stock market gamblers. Welcome today. It's Tuesday. I'm Tall Mike. So glad you're here. We got a rally going on in the stock market. Dow Jones up about 600 points. NASDAQ up about 300 points. Now, have we seen the low yet? Personally, I don't think we have. We're really close. A lot of people think this is a crash. This is not the crash. This is a normal correction. Normal corrections happen about once a year. When the crash happens, you will know it's going to drop about 80%. We're only down, let's call it 15% on the S&P, 20% on the NASDAQ, well within a normal correction range. Now, I'm not shorting the market anymore. I'm out of my short positions and I'm looking to get long. I do think we have a little more downside left. Now, I do think we're going to run up and hit a new all-time high. I think we're going to print the money. I think they're going to throw everything at this market they have. They're going to throw just plenty of debt. And the war in Russia is going to be an excuse not to raise interest rates much, keep printing the money, blow the market up higher. They're going to try to blow this up one more time. We'll see if they can do it. I think they can, but I'm looking to get long, have a little bit more on the downside though. I'd like to see the S&P get below 4,000. I think would be a great buying opportunity to go long. Okay, what I want to talk today about is real estate again. It's a double bubble. Now, it's unusual to have a double bubble in real estate. What am I talking about? I'm talking about that prices are at record highs, but rents are also at record highs. You got rents at record highs at the same time prices are at record highs. Normally, that doesn't coincide together. But right now, we've got this double bubble. Now, will this bubble pop? Well, let's talk about this a little bit. Now, back in 2008, we had this big bubble, right? And this bubble was brought on by debt. It was brought on by subprime mortgages. Back then, I'm a real estate broker, and back then I could get anybody a loan. If you were breathing, I could get you a loan. And I could get you that loan with somewhere between 0 and 3% down. But things have changed right now, and that's why people are saying, Mike, it's different this time. It's different this time. The borrowers are credit worthy. Now, we're going to talk about that in a little bit here, the credit worthiness of the borrowers right now. Okay, so Case Shiller, now they say the bubble right now is 45% bigger than it was in 2008. So we've blown the bubble up bigger. The bubble is bigger. Now, when the bubble's bigger, it's going to come down faster, going to come down quicker. I do think we're going to get that half off sale. Now, in 2008, we didn't get a half off sale. We got about 30%, I guess we dropped. About 30%. The bubble's bigger now. We're going to get at least a half off sale. That's my opinion. Now, okay, so the borrower's credit worthy, right? So they're putting, they come in and they're credit worthy, but their houses have gone up. So they have this equity sitting in the houses. Well, what a lot of people have done is they've tapped into the equity. Now, what are they doing with the money that they get that they pulled out of their house? See, the house went up. They bought their house went up. They have more equity. They take the money out and they have a new loan on the house. Now, what they do with the money that they got? Well, a lot of them have put it into the marketplace, into the stock market. They put it into Bitcoin. And, as long as these things keep going up, they're going to be okay. Now, I knew this one financial advisor back in the dot-com crash. Now, this was when the NASDAQ was flying high at 5,000. She was telling people to go out and take a second mortgage on their house and put it into the NASDAQ. And a lot of people followed her advice, and that's what they did. They pulled out a second mortgage on their house and they put it into the NASDAQ. Well, you all know that the NASDAQ crashed. The dot-com boom broke. The boom turned into a bust, and that broke. Now, they still have to pay that debt back on their house that they lost in the NASDAQ. Now, what does that make them do? Well, it makes them sell their house. Now, she got sued by a lot of people, and she's no longer a financial advisor. Don't always follow the advice of this, but right now, a lot of people are doing the same thing that she was advising them to do. Now, she would have been a genius if the NASDAQ went from 5,000 to 10,000 because they would have made a lot of money. They could go and pay off that second mortgage they took on their house and everything would have worked out fine, but it didn't work out fine. It crashed. Now, I think we're going to see that this time again. People have taken money out of their house. They putting it into the stock market, into Bitcoin, and when these assets come down, they're going to have no way to pay the second mortgage back. And they're going to be putting their house onto the market just like they were doing in the dot-com era. Now, okay, so maybe it's not quite the same this time. Maybe it is the same. Okay, but here's the thing. Now, many banks have already stopped doing mortgages. They stopped doing home equity lines of credit. Why? Well, because they don't want to be caught holding the bag. They don't want to be the bag holder. They were the bag holder in 2008. The short sales came. People came and did the short sales. Now today what they're seeing is the writing on the wall. What I want to talk a little bit about is the people that are not making mortgage payments, the people that are not still making rent payments. A lot of people are not making payments, and there's millions of these. Okay, now this is just a rough estimate. I would estimate that 5 million people are not making their mortgage payment right now. Mike, that's crazy. That can't be. Yeah, well, the numbers aren't exact. It could be as many as 10 million, but I'm going to go with the number 5 million people are not paying. They're paying nothing. They're paying zip. Okay, here's how it works. All right. We know there's over 1 million people that are delinquent on their mortgages right now. Over 1 million people delinquent. These are loans that are delinquent over 90 days. It means they haven't paid for at least 90 days. Some of them haven't paid for a year. Some of them haven't paid for 2 years. They paid nothing. They're called delinquent loans, and they will be foreclosed upon. Foreclosures are coming. There's going to be a tsunami. But there's 1 million people that are delinquent over 90 days. Okay, so we know 1 million people are not paying their mortgage, but there's more than this. There is somewhere between 3 million and 5 million people that have gone on to what's called a forbearance program. A forbearance program allows you not to pay your mortgage for anywhere between 12 and 18 months. They don't have to make their payment. Now, do they still owe the money? Yes, they still owe the money. It's tacked onto their loan at the end. Okay, so their equity is going down because their loan is going up. Okay, so the loan is increasing, the equity is going down. Now, when houses start to go down, their equity is already increasing because their loan's going up. Okay, so the houses start to come down. These people are going to have a choice, okay? They're either going to have to come up with the money to start paying on their mortgages, but most of these people have a cash flow problem. Either they cannot afford to make their mortgage payment, or they just don't want to make their mortgage payment, and therefore they're not paying. There's 3 to 5 million of those people. So I would estimate that right now we got 5 million people not paying their mortgage. Now, not all of these will become foreclosures. Some people will start to pay their mortgage. But a lot of these are going to become foreclosures, especially if the market takes a little bit of a downturn. People are going to start to want to get out. Now, maybe they don't go all the way to foreclosure. Maybe they sell it with a deed in lieu of foreclosure or something of that sort. Okay, but these houses are going to be coming on to the marketplace. Okay, so we're going to see the foreclosures coming on. Now, there's still a lot of people out there that are not paying rent. Now, they haven't been evicted yet. There's in Los Angeles, there's still an eviction moratorium. And well, the governor Newsom, he's paying the landlords 80% of the money that they're due. But a lot of landlords won't take this. Landlords have been hurt, and they don't want these properties anymore, because when the government comes in and says that you can not pay your rent, it hurts the landlords. Now, people that don't pay their rent, what else do? Well, they don't take care of the property very well. The property gets run down, so the landlord has expenses to fix up the properties. And a lot of them, they got to fix up the property before they sell it. Now, some of them can just go to the online, the iBuyers, like Open Door. They'll give them an offer to take the property as is. Of course, it'll be 30% below market value, and Open Door will try to flip that property. But these landlords are frustrated with the people not paying the rent. So the landlords, they have a cash flow problem, and they could go into foreclosure too if they can't make the payment. Not all landlords are rich. Now you get the BlackRocks, the Blackstone, the corporate landlords. Yes, they have money, but the mom and pop landlord, look, if you're not paying the mom and pop, they got to make their mortgage payment, and they got to make the mortgage payment on the rental. So they might be in a little bit of trouble, and they might want to get rid of that rental at any cost. And that could bring the house prices coming down. There is a lot of things that can bring the house prices down, and I do think we're going to get a half-off sale. Now, will we get this half-off sale in the stock market? Not yet. Not yet. Later this year. I still think we're going to run up to new highs. I do. I think we're still going to run up to a new high one more time, which will give you a chance to exit the market before the half-off sale comes in the stock market, which will definitely bring down the real estate prices. I'm Tall Mike. If you like this stuff, give me the thumbs up. Get out there. Have a great Tuesday, everybody, and we'll talk again real soon. Bye-bye now.